Hi, good morning, everyone. Welcome to our Coinbase IPO watch party. My name is Laura Moreno Lucas, and I am the founder of PandaCap. And I am joined today by my co-host, Achilles Larea. Today, we plan to walk through what actually happens on an IPO day for a company. It's a special situation with Coinbase going public today. We'll talk about what it means to go public. We'll comment on some of the things that are going on CNBC as they wait for their first trade. And we'll do that over the next 15 minutes to bring you some insights on Coinbase, the company. And all right, well, let's get started. Achilles, you want to share a little bit of background about yourself and how you're feeling today on this Coinbase IPO watch party?
Yeah, Laura, thank you very much for having me. Always a pleasure. First off, let me say my name is Achilles Larea. I'm the founder and CEO of Larea Wealth Management. I've had the good fortune to be in this industry for the last 25 years plus, and watched many companies go public, some very notable names when I was with the big houses. And when I started out my own firm back in 2002, have had the pleasure of seeing companies going public that were not so well known, but still made a big dent in the financial world. And Laura, I love what you're doing with this. I think it's an amazing thing. There's a lot of companies that come public, but today's company, Coinbase, this is a watershed event, like MarketWatch.com said about this. This is a watershed event. This is going to be the intro to what's going to happen with cryptocurrency, and really, I hope, bring it to the forefront. And the people who are holding the cryptocurrency right now, they're probably looking to make a lot more than they have in just the past few days, because the past few days have been very interesting. And if you're not owning this right now, you really should consider it, either with your investment advisor or whomever you look for guidance.
Yeah, thanks, Achilles. Thanks for the background. And yes, it's truly an exciting day. I mean, it's really kind of bringing some of the things that investors were concerned about back in the day when anybody was looking at the crypto market. It's somewhat validating the crypto market today. So let me give a little bit of background about Coinbase. So Coinbase is the largest US crypto exchange, and today it's going public via a direct listing. We'll talk a little bit more about what a direct listing is, because it's different than a traditional IPO, and it's listing on NASDAQ. This is NASDAQ's first direct listing. The market cap right now is expected to be over 100 billion. And to kind of contrast that, ICE, the company that owns the New York Stock Exchange, is valued at around 60 billion. So what's crazy about this is the valuation of Coinbase is going to be larger than the New York Stock Exchange, which is a historic entity in Wall Street. So that in itself,
Yeah, they're creating their own. They're creating their own history. It's going to be amazing.
Yeah, it's wild. I mean, when we think about the trajectory of crypto, right? It started back in, I don't early 2000s when it started, becoming a conversation. 2005, it, became popular. Then people started picking it up in '09 after the market meltdown. I think it really got some legs. And then it tumbled at, in between '09 and where we are today. So there was some push and pull whether cryptocurrency was really going to survive. And as we have seen over the past year, it has reached new levels, with obviously Bitcoin being a big focus for crypto. So what do you think about the sort of the evolution of Bitcoin and some of the other cryptocurrencies that have now reached new record levels and are trading on Coinbase.
Yeah, it's amazing because, at first it kind of started out, there are little whispers going on about this new kind of currency, and everybody had fears. I mean, I attended a conference roughly about 8 years ago on blockchain, cryptocurrency, and with a major accounting house, and they were talking how this was going to be the new asset class. And everybody was kind of like, because most financial houses are very conservative in nature. But what we've seen is this evolution of cryptocurrency, blockchain, cloud mining that has been occurring across the board and evolving. I mean, this year earlier we had news from Elon Musk that he was getting into it, and then PayPal was getting into cryptocurrency, and a lot of big houses, financial institutions were getting into it as well. So nobody wants to miss out on the boat, but nobody also wants to be the first to jump in. We as advisors have a say. We don't like to experiment with our clients' money. And the one thing you want to remember with, something like this, like you said, Laura, it adds legitimacy, it adds credibility to this new asset class, although it's not new, and affords the opportunity for new investments, and just an amazing way how they're coming public, going the direct route. They're not in need of having to raise money. So that's very interesting that's occurring with this particular IPO.
Yeah, so I'm going to talk a little bit about what a direct listing means. And so direct listing, for all of those who don't understand, it's a new way to access the public markets. And when I say new, it's been done before in the past. The first big company to actually use this method in a bigger way was Spotify. And so Spotify, it used this method to put their shares out to the public markets. Normally what you do is you do a road show, and in that road show, you go and meet a lot of institutional investors, and you go with the banks, and the banks are supporting you through this process, whether it's Morgan Stanley, Goldman Sachs, whoever the lead banker is, and they introduce you to their investor base that they think will be long-term supporters of your company and your shares. And then you go out and you determine what that price is going to be that all of these investors have come to the table that have interest in it. And then based on that interest, you set the price. And so then the next day it opens on the markets. Prior to it opening to the public, those investors then sell those shares to other investors prior to it going public. So there is this little window that, let's say for Coinbase, it would have been $250 going to this institutional group or these investors, and they would get first dibs at it. So what's happening today is there is no investor base that's coming in prior. It's just going directly out to the public. And what's helping them balance that is they still are being advised by Goldman Sachs, who's supporting this. And the way that they're doing it is they're working with NASDAQ, their head of capital markets, which is Jay Heller, to really kind of use the tools that they have internally at NASDAQ, which is the book viewer, that will help them really facilitate the open with Goldman Sachs to put this all out to the market, to you and I, so that we can start picking it up on retail trading platforms. I will say that E-Trade is allowing it to be traded. There are some others that are not. I know Fidelity is not trading it. So that's an interesting dynamic. Certain retail brokerage firms are allowing Coinbase to trade and others are not. So there's still some of that adoption on some of these platforms that have not been fully recognized. So what do you think about that, Achilles?
Yeah, that's not unusual. I mean, it doesn't mean that it's a right or a wrong situation. Just simply means that each house, each like a Fidelities of the world, E-Trades, they have their own rules and they adhere to certain guidelines. And more conservative houses may not go in. They could surprise you. A month from now, it could be a completely different animal. Merrill Lynch may say no right now, and then all of a sudden tomorrow they're doing the trading. The reason being is they don't want their traders missing out. So yeah, it's an interesting dynamic, but I would foresee that most of the houses, if not all the houses, will be trading in this as we go along within the week, easily.
Got it. Got it. Okay. Well, and as we said, based on the reference price last night, it's looking at $250 per share. But now we are getting indications from even this morning that it's looking more like $350 per share. So the pricing keeps going up and up and up. And I mean, it's just wild to think, but that's what the reference price was set for last night, was 250. So just to kind of compare, the reference price that for Slack, when they went public, was 48% higher than what they priced it at. And I don't remember exactly what they were priced, but it's 48% higher than what the reference price was determined at the night before. So could be one of those situations where, it hits new levels, even through this direct listing process.
And you have to remember also, Laura, that they may be erring on the side of caution and being a little more conservative with that price. It would be more so if it was a bunch of houses together taking the company public. But, just to make sure that the pricing was even keel, was really conservative, I think they went with that number. So it's not surprising that we're going to see a big pop this morning in the stock and over the long term, because this is a new asset class and they are the big player here in the United States.
Yeah, yeah. Well, we're still waiting for it to go public, and I'm just seeing now on CNBC the new indication is 360 per share. So we'll see where it goes. And before we end here, I wanna end with a note on the filing, the SEC filing that Coinbase put out. Their CEO, Brian Armstrong, references in their S1 filing. Coinbase is a company with an ambitious vision to create more economic freedom for every person and every business. Everyone deserves access to financial services that can empower them to create a better life for themselves and their families. But we're still a long way from that vision. And I really resonate with this statement that he put in the Coinbase filing, because as someone who's been in the financial markets for a long, long time, I know that in the past, some of the information that Wall Street has kept has been more towards insiders. And as you're seeing today and over the past couple years, it's now becoming something that is more transparent with Coinbase, going public, with other mediums talking about what's happening in the markets, with platforms that are making it more accessible, like, fractional shares for investors to be able to participate. So there's a lot of changes that have come into play over the past 5 years, and even significantly over the past year. So I'm really excited about, what's to come in this new market of the cryptocurrency space and digital assets. And I know that PandoCap will definitely be at the forefront of it to share all of that information with our community. So with that, Achilles, I'll give you the last word and we'll sign off. And as I said, Coinbase is looking right now at $3.60 per share. And we'll keep you updated as the day goes on once it starts trading.
Thanks, Laura. Here's what I'll just say, just very quickly. There's always a caveat. You always just want to be aware of what you're getting yourself into. There is risk. Anybody who says it isn't hasn't looked at the charts, how they've moved. But more importantly, this is a new asset class. You want to get on the ground floor. You don't want to wait too long to get into it. But please do your due diligence. Please research this. There's plenty of information that, just look it up through Google. You're going to find some information, some good information there. Go with your eyes wide open, and I look forward to seeing you at the top with this brand new asset class.
All right. Well, great to see you, Achilles, and everybody. Enjoy today. And what an exciting day for the capital markets on Coinbase. Again, it's looking like right now it's at 360 and should start trading soon. Have a great day, and we'll bring you more from PandoCap. Ciao.